Urgent NIO stock message for NIO shareholders. NIO stock exploding. The stock market is one of the most interesting and looked upon sectors of the economy. There are thousands of stocks on the stock market. It can be a hectic task to decide which stocks to invest in. Stocks are very risky, but when understood and invested smartly, they can lead to immense profit. A stock, or also known as equity, is a security that represents the ownership of a fraction of a corporation. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. Units of stock are called shares. Stocks are bought and sold predominantly on stock exchanges. Hey guys, welcome back to Stock Market News. In today's video, we'll talk about the exploding of NIO stocks, so stay tuned for an amazing experience about stocks. Typically, stocks are broken into two general categories: growth stocks and value stocks. Growth stocks are typically considered companies that are expected to increase at rates above the average rate of the market. These investments typically do not pay any form of dividends, preferring to reinvest their earnings back into projects with the hope of helping the company to develop and expand even further. Growth stocks do not immediately produce results. Most of the value is derived from future earnings. In essence, you are investing in what the company will become instead of what the company is now. Value stocks are companies that are or close to full maturity. There's not a lot of room for growth with these stocks. Because of this, these stocks usually pay out dividends to make their investors happy. In essence, you are investing in what the company is now and what it will be in the future. What is NIO? NIO is a Chinese company which produces electric vehicles. It has brought about a great revolution in the automobile industry. NIO is headquartered in Shanghai. Specializing in designing and developing electric vehicles, the company is also involved in the FIA Formula E Championship. Although NIO has ended funding for the team after selling it to Li Xing Racing. The CEO of NIO is William Li. The founders of NIO are William Li, Xin Tongqing, and Li Hongqin. NIO has recently turned their brand into stocks. The company registered itself on the stock market list in 2018. Chinese EV startup NIO surprised the market this week by announcing that it is forced to curtail EV production due to a worsening part shortage that could potentially materially impair NIO's ability to double electric vehicle deliveries in 2022. In related news, NIO said that it is going to follow other EV companies and raise retail prices for all of its electric vehicle products. What happened this week with NIO stocks is mind-boggling. NIO stocks have been declining for the past many weeks since the advent of 2022. However, NIO stocks bounced back sharply this morning and was surging as high as 8% as of 11:30 a.m. Eastern Time. Arrival just made a huge growth move in the only international market NIO is targeting, but investors are placing big bets on NIO ahead of earnings and on speculation of the launch of a new car model in the coming weeks. The stock sank yesterday after Deutsche Bank analyst Edison Yu slashed his price target on NIO stock to $50 a share from $70 per share to factor in geopolitical and supply chain risks. NIO also faces the threat of getting delisted from the U.S. stock exchange alongside other Chinese stocks. Yu also expects NIO's gross margin to fall sequentially in the fourth quarter to around 17% in the wake of surging raw material prices, according to CNE Post. Further, Yu expects NIO to deliver only around 25,000 vehicles in the first quarter, or similar to the fourth quarter. Beyond the first quarter, though, Yu expects NIO's deliveries to pick up from the second quarter and sees the company delivering 160,000 vehicles this year. In short, even if NIO fails to impress investors, given the several macro challenges facing the company, that shouldn't hurt its long-term growth story. Investors seem to be taking note this morning and are buying NIO stock while it's still trading significantly below its 52-week high. This company has set up itself globally. That is, its design team is in Germany, its vehicle performance team in London, head office in Shanghai, China, and software development team in the Silicon Valley. It has gotten a really great push at 1.68% per day. That means if the stocks had started from $13.92, it would have got pushed to $15.43 and still growing. NIO attracts a buy rating from Bank of America on expectations from second half turnaround. Bank of America has upgraded NIO to a buy rating on the expectation that a higher sales level will lead to better margins in the second half and margins of the second half of 2022, with the negative factors already seen priced in. NIO has been able to grow vehicle margins of its product lineup to 20.9% in Q4 21, showing an improvement of 370 basis points compared to the year earlier period. However, supply chain issues and inflation due to rising material costs are a threat to NIO's profit margins. To compensate for higher battery costs, NIO just announced on its app that it was raising retail prices across the board by 10% effective May 10th. A new NIO electric vehicle starting next month will become 10,000 Chinese yuan or $1,572 more expensive. NIO's battery prices will also go up by between 1,480 and 1,680 Chinese yuan. By raising retail prices, NIO follows other EV startups such as XPeng, which also increased prices last month, in part to compensate for higher material costs, but also to offset cuts to EV subsidies. Li Auto also raised prices by 11,800 Chinese yuan, which calculates to about $1,855. NIO's price hike may lead to a short-term dip in vehicle reservations, but I believe it will not impact NIO's long-term potential for sustained revenue growth. NIO's number one risk right now. NIO's biggest risk is the supply chain. As risks to the supply chain are growing, NIO's ability to achieve 100% electric vehicle delivery growth in FY 2022 is also put at risk. NIO does not make full-year delivery projections, but analysts are likely to refresh their delivery and revenue estimates for FY 2022 to account for the latest round of factory shutdowns, which could result in the stock revaluing lower. Tesla is the ultimate competitor to NIO. Let us talk about the Tesla versus NIO stocks. Which EV stock will gear up in 2022? There's no doubt that NIO and Tesla are two companies leading the charge in the electric vehicle space. Both companies are gearing up to make big moves in the upcoming decade, but which company is better from an investment standpoint? Executives of both companies have optimistic outlooks for the upcoming quarters. During Tesla's Q4 earnings call, Elon Musk outlined the company's recent performance and vision for the future. Musk related to shareholders, "It was a breakthrough year for Tesla and for electric vehicles in general. And while we battled, and everyone did, with supply chain challenges throughout the year, we managed to grow our volumes by nearly 90% last year. This level of growth didn't happen by coincidence. It was a result of ingenuity and hard work across multiple teams throughout the company." Additionally, we reached the highest operating margin in the industry in the last widely reported quarter at over 14% GAAP operating margin. Musk went on to share, so in 2022, the supply chain will continue to be the fundamental limiter of output across all factories. So, the chip shortage, while better than last year, is still an issue. And yeah, there are multiple supply chain challenges. And last year was difficult to predict, and hopefully this year will be smooth sailing, but I'm not sure what you do for an encore to 2021 and 2020. Nonetheless, we do expect significant growth in 2022 over 2021, comfortably above 50% growth in 2022. NIO versus Tesla stock, which is best? From a valuation perspective, NIO has an upside of $19.82 based on a discounted cash flow forecast analysis, suggesting it is fully valued at this time. Applying a similar analysis to Tesla yields an intrinsic price per share of $819, implying that Tesla is currently overvalued to the tune of approximately 17%. The bottom line is, when it comes to valuation, NIO is currently the better bet versus Tesla stock. That's it for today, guys, as it's time to wrap up today's video. Do tell us your opinions about the NIO stocks in the comment box. We hope you liked the video. For more such content, do subscribe to our channel and do share with your friends and family. Thank you guys for watching this video, and we'll see you next time. Till then, keep exploring, keep learning, and keep growing.